In this video, I'm going to show you the spreadsheet that you see on your screen, which is a cost spreadsheet that will allow you to calculate profit for each product or service you sell. If you're interested in this spreadsheet, it's available for purchase at the link in the description of the video. This spreadsheet will handle the complete pricing for you. So, you'll input the costs of the products you're going to sell, enter a desired margin, and it will give you the main information, the selling price. So, this is the main feature of this spreadsheet. This spreadsheet is a pricing spreadsheet that will help you arrive at the selling price. But beyond that, it will make it clear to you what profit you will make per product you are selling or service you are going to sell. So in this case, to help you understand the dynamics, we're going to do the pricing for 4 products. First, a smartphone, a laptop, wireless headphones, and a gaming console. You'll see how easy it is to arrive at the selling price and also know what profit you'll make on each sale you make. First up, a smartphone, a laptop, wireless headphones, a gaming console. You'll see how easy it is to arrive at the selling price and also know what profit you'll make on each sale you make. Pricing is generally quite simple. You just need to enter the cost value, the desired profit margin, and then the sales price. The profit you will make is all calculated using the spreadsheet. But to arrive at the correct selling price, you need to consider 2 other variables, which are the fixed costs and variable costs that you'll have for each sale you make. When we sell a product or service, there's what we deliver to our customer. For example, if I'm selling a smartphone, I'm going to deliver a smartphone. So, that's the merchandise sold. But the selling price can't just include the cost of the merchandise sold. It has to account for how much that cost you. You also need to include other costs, which are the costs that will keep your business running and will also be present in the sale indirectly. Fixed costs are one of those expenses. Fixed costs are all those expenses that won't change no matter how much you sell. So, in the example of the smartphone, whether you sell 1 or 100, your rent, salaries, internet, all those costs I mentioned here. And undoubtedly, in your business, you probably have other fixed costs. They won't change. That's why you need to enter the name of the fixed cost in this tab, the monthly amount in dollars, and also input your revenue, your monthly earnings, right next to it, so the spreadsheet can calculate the percentage of fixed costs that should be factored into the price of each sale you make. Then we have the variable costs, which, unlike fixed costs, will indeed vary as you sell more. But they will vary as a percentage of the selling price. So, for example, it could be commissions. It could be transaction fees. I'm always talking about a percentage, which, if you sell, for example, for $100, will always be a percentage of that $100. You'll think about what they are for your business and enter them all here. This spreadsheet lets you create a product, input materials, name, quantity, and price. So, for example, if you're making a cake, you can input all the materials here, what the product name is, what the quantity reference is, and what the reference price is, so that the spreadsheet can help you put your product together. Then we have a tab here where you can build your product, so that the spreadsheet can help you put your product together. So we have a tab here, where you will assemble your product. Then I'll take this much of such material. I'll take another quantity of such material, and you'll compose your product. In our example, we are using the resale item, that is, I buy the smartphone ready. I am not assembling the smartphone, I am buying the smartphone ready, and I will do the pricing from here. But if you assemble your own product, if you assemble a service, and then you will have ours, together with input materials, you must register all these items here in the materials, and assemble your service or product here at Bolab. The spreadsheet is quite comprehensive, so it allows you to do that. But in this example, as I mentioned, we're going to do so now that you've defined the name of your product, the fixed costs, and the variable costs you have in your business, you can set the pricing. So here we enter the product name in the first column. In this case, for example, smartphone, you will enter the cost value, which I'm putting is $600, and you will enter the percentage of the margin. In this case, 20%. What is a 20% margin? It means that your profit is 20% on the selling price. If you sell $10,000, you will make a profit of $2,000. It means that if you sell $10,000 monthly and have a 20% profit margin, you profit $2,000. So, in this case, this percentage is based on selling price, not cost price. Once entered, calculations are automatic. So, this percentage shows profit based on selling price, not cost price. From this column, no change is needed as it's auto-calculated. Spreadsheet calculates fixed and variable cost percentages and markup for selling price. With this data entered, from this column onwards, you don't need to change it, because it's all spreadsheet calculations. The spreadsheet calculates the percentage of fixed costs that should be passed on, the percentage of variable costs, and the markup that ensures all these costs and margins are accounted for, leading to the selling price. In this case, the smartphone you bought for $600, as an example, should be sold for $1,179. From $1,179, you profit $235. That's the profit for this product, plus $214 in fixed costs, and $129 in variable costs make up the selling price. The variable costs percentage is 11% of variable costs. That will make up this selling price. The percentage of variable costs you mentioned is 11%. So if you calculate 11% on the selling price, it comes out to $129, which is the variable cost you incur on that sale. In addition, the fixed cost should be set aside at $214. What is this? In this sale, 18% of the sale amount is $214. So that means you're going to have a small amount from the sale you made. That should be set aside, which will add up with other fixed cost amounts saved from other sales, so that by the end of the month, you have a total of $6,350. Which is 18% of what you said you were going to sell. So, since in each sale you set aside 18% to cover fixed costs at the end of the month, in the total amount you sell for the month, you'll have exactly the fixed cost amount you needed. This way, you can calculate the selling price and the profit for that specific sale. For all the others, you have the right values. So, for example, the laptop is selling for $2,400 and you have a profit of $734. The dollars and you have a profit of $734. The video game console has a selling price of $786 and your profit would be $157. So, in a very simple way, this spreadsheet turns costs into selling prices and then into profit margins in an extremely straightforward manner. So you don't have to learn Excel or advanced pricing concepts. Instead, you can focus on your business, which is definitely your most profitable asset. As I mentioned, this spreadsheet allows you to do complete pricing calculations, whether for known costs, as we've seen, or for unknown costs, like a service or a product you're putting together, and even for pricing known costs at scale. It ensures that all fixed and variable costs will be accounted for, and you have a selling price that will guarantee you a profit margin already known, even before the month ends and before making the sale. If you are interested in this material, as I told you, it is available for purchase at the link in the video description. Don't miss the chance to get this valuable material. We'll see you around. Take care.